Real Estate and Mortgage Show, your go-to spot for everything home buying, selling, and financing on News Talk 580 CFRA.
Well, welcome back to the show, everybody. So, Frank, I was reading an article this morning that the economists, I believe at BMO, anyway, one of the big banks, saying they're actually revising their forecasts for this year, and they've revised inflation up from 2.2% to 2.4%, but they've got sorry, I'm trying to read my notes here, and I can't even. I know I need to borrow Paul's glasses so I can read my notes here. But yeah, and unemployment being revised up from 6.5 to 6.7, and GDP staying flat. Like, how would it even be possible that there could be talk of an interest rate raise with those kind of numbers being revised by economists at the big banks?
Well, 2.4 is not going to create anything. I mean, we've been as high as 2.8, and Bank of Canada's lowering prime rate. So the concern isn't whether they get into the twos, because into the twos, if unemployment, and by the way, unemployment's already at 6.8. So the fact that 6.7 is not a concern. The concern is 7.5. That's where kind of they got to make a tough decision now. If it's going all the way up to 7.5%, then the economy is going to start getting into more trouble, and that our word is going to start to creep into many of the conversations, which normally drives interest rates down. So, GDP is a big one too, and if the trade agreement again goes sideways, that'll be a concern. But it's nice to see that Canada's negotiating with other countries, so we're not so reliant just on the U.S. So that should help GDP, but it's a long-term game. When you make agreements with other countries, it typically takes anywhere between 12 to 36 months for the numbers to actually reflect on the GDP. So GDP is expected to be weak this year. Unemployment is expected to go up, which is a problem. Inflation is the only driver that's going to impact interest rates. So right now we've seen fixed rates go up, and that's why there's some concern where people are emailing me about converting their variable and or their adjustable rate mortgage into a fixed. But in many cases, I'm going through the facts with my customers and saying, here's why I think you should remain in the adjustable variable, because the adjustable variable now is about 3/4 of a point less than a fixed. So why do you want to go up 3/4 of a point when the chances of prime rate going up by 3/4 of a point seem very slim at this point?
Right. I mean, with all this conflict, the bond markets must be just going crazy, and that's going to be driving up your fixed anyway, right?
Well, that's the problem, is that, he'll say something either after the markets close or before the markets open in the morning, and it spikes one way or the other. And then, within an hour or 2 hours, whatever was said early or late at nighttime is all of a sudden contradicted by somebody else. And next thing you know, the markets go the other way. So what we're seeing is these huge roller coasters where, and sometimes from day to day, where one day the bond market will come down 15 basis points, the next day it goes up 10 or 12. Then the next day it goes up another 8. Then the following day it goes up another 3. Then it comes down 5. Where generally speaking in our industry, we see the bond markets fairly flat from day to day, with the exception of the odd day when some news happens that makes it spike one way or the other. But on a daily basis, you might see it go, if it's in an upward trend, it'll go up 1, 2, or 3 basis points for 5 days in a row. And therefore, that's 15 basis points that it's gone up.
Yeah.
Now we're seeing the more significant spikes.
Frank, it's funny how, I've been doing this now for almost 22 years, 21 change. You've been doing this probably for about 18 decades, Frank. So, I mean, but over that time, you could usually predict what's going to happen. You could predict, what's going to happen in the real estate market, what's going to happen in seasons in the real estate market, where we expect rates to be. Is it a good time to lock in? Should I go variable? Should I go fixed? I would say over the last 5 years, that's just gone out the window. Like, it really has gone out the window, where someone's like, asking me about the real estate market. I mean, I'm very educated on what's going on in the real estate market, but there's some days that I'm like, I didn't see that coming. They're throwing new programs here and there. Things are changing here and there. They're trying to spur things on here, which changes this, and it's just such an uncertainty in the real estate market right now. It's so hard to predict what is going to go on. I mean, I thought 2026 was going to be a fairly decent year. The numbers are telling us extremely different. I mean, when the numbers come out in the next week about what happened in the March market, I think for third third month in a row we're going to be down. Our number of sales will be down. Our average sale price is going to be down. We ended the year with an average sale price of $700. We ended February at $653. Where are we going to be?
Quite a drop.
Where are we going to be at the end of March? Maybe 660, 670, and maybe high. I don't know, but it's just we're not seeing a strong start to the 2026 real estate market. I hate to be doom and gloom, but I'm just saying the numbers are telling us has not been a strong start. You can blame it on the snow. You can blame it on how cold it's been. You can blame it on all the programs that are coming out. You can blame it on what's going on in the world and the wars and all those things. But it's really, really hard to predict what's going to happen. And we've lost our spring market because that usually starts in mid-January. We've lost our spring market. I hope we get a late spring market. We have a strong April and we have a strong May, and we get these numbers back up a little bit because it's challenging right now. The market is challenging. I talked to a lot of realtors out there, and they're struggling. They're struggling. They're dying for business, and they're finding it so hard to educate themselves on what's going on in this market because it's changing. It's so fluid.
So quickly.
It's so fluid and it changes so fast that if you don't, more than any time in history. I mean, we were talking about this, Greg, before coming on the air.
Yeah.
In this market, $10,000 overpricing your home is the difference between you selling and not selling. $10,000. Like we are
on an average price of $653. $10,000 doesn't feel.
Yeah, well, like, we were talking about, we're like, $10,000 is nothing on an average price of $650.
Yeah.
It's a mountain. It's an absolute mountain,
Really, that's what you're seeing in the resale side of things right now.
Oh, but I've said it many, many, many times before. You have to list with the best people, the best marketing plan, the most educated, the best negotiators. You have to. You can't risk it in this market. You have to have your house.
You know anyone that does that, Paul? You know anyone that does that?
You can't. You literally can't have your house showing terrible. It has to show absolutely perfect. But more important than the first two are pricing your home properly. And if you're not going to listen to your realtor who has all the forensic evidence, we study the market nonstop, we know everything about the areas, we do the homework, and we tell you where it should be priced, and you say, I want to try this price, that's like nails on a chalkboard in most markets. In this market, it's like sliding down a razor into turpentine. Like it's what it's like. Like it's awful. It's awful that you want to try something in this market because I'm telling you, you can't. You have to be priced perfectly if you want to get your home sold.
I know we talked about this a little bit with John last week when he was on the show, and I always find it fascinating when sellers say they want to try that higher price. Do they not understand that if you're representing a buyer, you have that same forensic evidence? Wouldn't you advise your buyer that house is overpriced and not?
100%. That's our job. Like we'll go see a house and the buyer's like, oh, I really, really love it. What's your thoughts, Paul? I'm glad you love it. What do you think on price? Well, that. Guys, it's overpriced. Like, here's the evidence. Here's what's going on in the market. The buyers have the same evidence that we have. The buyer agents have the same evidence that we have. They know it's overpriced. And, like we've put a couple homes on this week that the people wanted to try a different price. And we've had numbers of showings on them, but the reason we've had so many showings is because they're looking at all the other homes in the area, realizing that this home is overpriced. And guess what? That price that I did tell you is now gone. It's gone. Because now you have to get under that price, and that's the worst thing you could possibly do. So if you don't price it right out of the gate, then you're going to sell for lower than what I actually told you you're going to sell for. We are not in COVID. You can't just throw a price at the wall and say, I'll try that one. We are not in COVID. We are in a very strict, disciplined market where evidence tells the story. And if you don't follow the evidence, you will be part of half the market that doesn't sell. We last year we ended the year, only 51.5% of homes that hit the market actually sold. Right now, we're in the low 40s. Only I think it was 44% of all the homes that hit the market actually sold at the end of February. 44%. So there's a huge chunk of homes that are not selling, and they're not selling for a couple reasons: condition and price.
Right.
One of those two. If you're not selling, you got to look at one of those two.
Right. And you can price yourself correctly for bad condition as well, correct?
Oh, absolutely. I mean, if your house is not in great condition
For example, if you had it rented out and the tenants
Yeah.
trashed it a little bit, then...
Yeah, and so a lot of people will say, oh, I'll just go replace the kitchen, the bathrooms, this, and this, and they'll just jack up the price to there. That's not how it works. A lot of times you might be smarter not to do the work and just price it accordingly. But get us through the door before you decide whether you're going to do the work or not, because we'll tell you, do this, this, and this, but please don't spend money on this, this, and this if you want top dollar for your property. So yeah, you can, if your condition is not great, and even if you're low, so 3 things: condition, location, and price are the 3 most important factors. Location, you can't change. Condition, you can, but price, you can either change the condition and price it differently, or keep the condition and price it differently. So get us through the door, so we'll tell you exactly what we need to
what
do,
your
what you
options
need to
are.
do, what your options are. And I would hate to see you spend $50,000 to make $20,000. I hate this, right?
Yeah.
I'd rather see you spend $20,000 to make $50,000.
Right. So, Frank, are you seeing, like, obviously we've talked about the wave of renewals coming this year. I'm sure we're well into that at this point. Are you finding clients are talking to you more about refinancing and taking some money out to do renovations rather than look at selling?
Yeah, it's 50-50 as far as people just renewing and are happy where they're at, because obviously anybody that got a mortgage 5 years ago in the ones and the low twos, most of their payment went towards their principal. So the good news I say to them is, listen, I mean, you managed to have ultra low interest rates at a period when your mortgage was at its highest point. You've knocked down a bunch of principal. So now you've built up a lot of nice equity in your home. So now, even if your rate is going to be double what it was on your renewal, because you've knocked it down, the amount of interest you're going to be paying is significantly less. So that's the good news.
Right.
As far as people are looking at this, and, I know that we're pushing at our association to get the land transfer tax for first-time home buyers increased from $48,000. Hopefully that's the next thing that Doug Ford looks at. But people who are selling one home and buying another home are not only looking at the fact that maybe, and it used to be a little easier when the prices weren't as much, but now if you look at having to pay real estate commission, having to pay the land transfer tax on the new house, some people do the math and say, we thought we were going to sell this house and buy another one, but now instead we've decided we're just going to get $50,000 of equity out of our home, and we're going to do some renovations and make this the house that we want. So it's interesting to hear that some people are doing that, and that's bad news for the real estate industry.
Well, bad, it may be in the short term.
Point of people switching homes, because again, It used to be you buy your townhome and then you graduate to a single home, and then maybe that third home is your forever home kind of thing, long-term home, where it's, now you've had kids. Where now what we're seeing people say to us is they might be in their townhome and they're saying, we're just going to put a new kitchen in our townhome and stay here because the cost of everything is so crazy. We don't think it makes sense for us to go into a single home at this stage in our lives.
Yeah, it's not a far out thought at all. Like we are seeing that. We're seeing people who are putting more money into their homes and staying put. Definitely. But I mean, there's people that have to move, right? There's people that moving into the city. There's people that move out of the city. There's people that have to move. But yeah, it will be interesting because, I mean, there's a lot of people that can't afford to move right now. I mean, they just can't, especially with the prices coming down a little bit. And, we're seeing our average sale price sneak down a little bit, and things that I was expecting weren't going to happen in 2026, and they are happening right now in 2026. So not to do doom and gloom, because I still think we're in a relatively strong market. Like, we're not in a terrible market. I know the numbers are telling us we're in a challenging market, but homes are still flipping hands.
Yep.
We had 2 multiple offers last week, so things are still going into multiple offers.
Priced properly.
If you're priced properly, there's a very good chance you can get into multiple offer. But yeah, it's not doom and gloom. This is also some decent news. It's just not the great market I thought potentially we were going to be in.
Hey, have a question, head over to realestateandmortgageshow.com and submit it there, and we'll get it answered on the air. Or give us a call at 521-TALK, 521-8255. We'll be right back. Welcome back to the show, everybody. I guess everybody waited till the last segment to call in. We've got a bunch of calls lined up right now. So
we may not get to everyone. We'll do our best.
We're in our last segment, guys, so keep your questions quick, and we'll get them answered as best we can for you. So we're going to go to Bill in Franktown, who has a question about farmland. Bill, welcome to the show.
Thank you very much. Paul, I have a question for you. I have 100 acres. I'm trying to sever 4 lots off it, but I don't have enough road frontage. I realize I may have to upgrade the road because it's on a dead end, unopened road allowance.
Yep.
But I can't find a planner anywhere.
You can't find a planner to do that for you?
Yeah, to do the, the township wants a planner. I don't understand why, but
Well, has the township given you the instructions on what they're looking for? Like have they told you what they think you can do? Have they given you any instruction on that?
yes, they told me I could sever off 3 more lots.
Okay.
And but I would have to upgrade the road because of the unopened road allowance up to their specs,
Okay.
which I don't have a problem with. I've gone ahead and surveyed just my corner posts so they know where everything is with the corner.
Yeah.
So my plan now, what they're telling me now is I need a planner's proposal.
Okay. So this is probably best you chat with me off the air. We'll chat this week about that. I'll give you my my phone number, and I'll set you in the right direction.
Okay.
Yeah.
That's good.
Yeah. So my phone number at the office is just. I mean, you can Google Paul Rushforth Real Estate, but 788-2122, or paul@paulrushforth.com if you want to email me. And I will set you in the right direction and get you to the right people that you need.
Okay.
I just want to hear more about your story, and we're in our last segment, so I do want to do it justice. So if you call me this week, I will set you in the right direction.
Okay, I'll call you early Monday. Thanks.
Okay, perfect.
Thanks a
Bill.
lot for the call, Bill. All right, to Alan Navin we go. Al, welcome to the show. You got a question about mortgages?
Yeah, good morning, guys. My son has a mortgage on a house that he bought about almost 2.5 years ago. He was talking to his bank, and they said they offered him probably a better rate. But right now he's with a not a private lender, but he bought the house through a mortgage broker. A quick thought: would it be beneficial for him to, like, the penalty to renew at the rates that are today compared to what he did 2.5 years ago at 5 and something %?
Yeah, I need to look at the data, right? I do the math. I mean, for me, it's simple math. I figure out what the penalty is. Once we know what the penalty is, then we can do the math as to whether it makes sense for him to break the mortgage financially, whether it does or not. Then number one, and then number two, does he need more money? Does he have the equity in the property to be able to do it? So there's lots of, again, same thing as what Paul just did with the previous caller. I think it's best if we talk off the air. Maybe give me a call in the office on Monday, and I'm more than happy to get more details so I can advise you properly as to whether it makes sense or not, because it's all about numbers.
Okay. And just another quick one. He seems to be having an issue to getting the numbers from his broker. Like, it's always like he asks the question, and they always, well, send me the paperwork on the offer, and we'll see if we can match. Instead of just giving out the buyout numbers. Is there an issue? Why is there an issue?
I couldn't tell you. Again, I can't speak on behalf of somebody else. All I would say is, if we speak on Monday, I'll give you some more details as to what you need to do. A broker doesn't have what the numbers are, what the penalty is. It's the lender that has what the penalty is. So that's the number I need to be able to do the math as to whether it makes financial sense or not.
Okay.
Awesome. Thanks for the call, Al. Appreciate it.
Thank you.
Thanks, Al.
All right, last call goes to you, Ryan. Ryan up in Bonnechere Valley has a question about mobile homes. Ryan, welcome to the show.
Yeah, I was just wondering, this new buy bill from Ford, does that include modular and mobile homes?
Well, I believe it would. I mean, any new build falls under that. I believe it would. I mean, we don't have all the parameters of the Ford program, but as long as it's a new build, I can't see why it wouldn't.
Okay, that next question is, Ford says we got all this land and they're going to open it up, but there's still no way the developers are going to let this happen for me to go buy 15 acres in the bush, as long as it's not by water or that sort of thing. I can get that land for 15 grand, but nobody's willing to let me buy it.
Well, who owns that land right now? Is it a developer, a builder, or the city, the municipality?
Basically, a farmer who wants to cut up his land like the last guy there.
I don't know the specifics of the story. I don't know why they wouldn't sell it to you. But I don't know the specifics of the story.
Maybe the severance just isn't approved.
Maybe
and
it's
as simple as that.
Maybe it's not approved, or I don't know the whole specifics of the story.
Thanks a million for the call, Ryan. We really appreciate it. I'm sorry we got to cut you off a little bit early. We gotta go. Frank, birthdays.
Yeah, I've got a few actually. Melissa Doxey from my office, our marketing manager, celebrated her birthday this week. Kay Coley, who's been with us forever, celebrated her birthday. Happy birthday to Kay. My nephew, who's a great mortgage agent, Michael Napolitano, celebrated his birthday. Christina Hodges from our sales support team celebrated her birthday. And I'm lucky to be here with both Darren Keck and Renee McNeil, who both celebrated their birthday, and we celebrated here in Antigua for their birthday along with the lenders. So happy birthday to all of them.
Amazing. I have a couple. On the first, Kevin Janig has been with me, one of my super agents. He's been with me for 15 years, which is a long time. And also on the 5th, I have 3 birthdays. My office manager, Angie, and I can't tell you what number it is, but it's a biggie. It's a biggie. You'll see 39, but you'll see her in
some months.
I'm going to tell you, next week and weekend, don't be in Nashville because that's where she will be. And then, of course, one of my top inside sales agents, Jason, and one of my agents, Paul Royce, celebrate their birthday on the 5th as well. So happy birthday to all them.
And Frank, quick plug for your reverse mortgage seminar.
Yeah, coming up on April 15th at Villa Marconi. If you're thinking about or want to know more information on a reverse mortgage, or if you're listening and your parents or your grandparents are thinking about it, sign up. You can go to our website or the realestateandmortgageshow.com website, and you can sign up on it there. And you get free lunch, and you get to see Paul and I and listen to Paul and I, as well as Allison Bygrave from Home Equity Bank. And we'll answer all questions that anybody has.
I'm looking forward to that. I've already registered. I'm bringing my mom, and I'm bringing Petra and Petra's mom. So I look forward to doing that. The other thing is I just forgot 2 birthdays that are big ones. Ones. Petra's dad on the 30th has his birthday, and he's 1 year off another major birthday. And of course, my dog Chevy celebrated his birthday this week too.
Oh, of course, Chevy.
Happy birthday, Chevy.
Have a great week, everybody.
You're in the doghouse anyway for forgetting Petra's dad.
I know.
Have a great week, everybody.
Please support local business and charities, everyone.